Yep.
What up, everybody? This is week 8, finding my way with Toad Sage. This week, we're getting a little bit more into break of structure, talking about context and where you're taking that break of structure. When I say context or trend, we want to know when you're taking that break of structure, is it at the top of a trend? Is it in the middle of a range, or is it at the bottom of a trend? These things will help you evaluate the breaker structure to see how strong that breaker structure is when you're taking a trade. Obviously, if we're in the uptrend and you get a breaker structure at the top, then you need to start thinking, is this breaker structure a potential reversal? Or is it a breaker structure to trap the short and then trap some longs and then squeeze it back up? So, so we're going to jump into it with Toad to see if we can find any live examples from his trades to see if it'll help him decide on making trades or taking trades and making that trade easier. Something that we talked about last week or last time we met was having Toad scale up. So we've had him uh track his trades to make sure that he's ready to scale up. Because you don't want to scale up too fast because when you over leverage yourself, you're going to blow up your account or take fat reds, meaning they're going to erase what you won the previous week, and you want to keep that consistent. You want to be a systematic trader, trading like a robot, where let's say if you're have a prop firm account, the first goal in a prop firm is to get over that buffer so you don't have that drawdown or to be able to withdraw some money. Uh, Something that I recommend is if the for Apex, the minimum threshold is 2,600. So you want to get above that and keep your account at 2,600 or above. So one of my strategies is whatever I want to withdraw from my account, I need it to be above that threshold. So like that, you don't have no drawdown, you don't have to worry about that. And maybe even take that payout and go dump it or go buy a lifetime license or go to a broker like Ninja Trader or AMP to be able to trade a live account with any of the rules that prop firms have. So without further ado, let's jump into it and see if we can discuss context with the Toad's trades.
Let's go. I've got that sounds great. I've got this first one here. Um Looking into I guess on context, right? If you, I'd think about mostly the hourly chart or things like that. You can tell me, what you think context is around here. So this was on the 16th. We had futures open at 6 p.m. We got a 15-minute chart down here at the bottom. And a run, it came down and then a run out of the gate and came back tagged to 61.8 like a pocket consolidation on the 100. And this was actually a enter and go to sleep trade. We were just talking about before we started recording, taking less trades. And I think a good way to do that is to practice on like one micro, just leaving it really all the way to like the target. Like almost no matter what. I mean, obviously not like once it's halfway there or something, not letting it come back and turn around into a full loss, but or I don't know what's best really because I don't have the data. But this one, right? So we are consolidating around the 100 of this fib that I drew. We made a gap, not too huge of a gap, like a 50 point, 75 point gap, closed it, and then we were got then a turn on the MACD, 15-minute MACD down here, um, sat around the 100. So I got in here. I don't have a screenshot of the stop originally, but it was under this big candle. So it was a pretty sizable. It was like 40-point stop. And then I was looking for the 1618. So then, yeah, I woke up and closed it. Actually, I had a target set on the 1618, which is actually bad practice. I think if if you're gonna leave a target and just leave it, it should be a shy target. Um, but I didn't do that, and I woke up and I closed it here. And then actually, right shortly after I closed it, it pulled back all the way to like down like probably 40 points or so. So yeah, that was this one. I want to look at this one to focus on like really leaving one. So right now I'm about 5 micros, really leaving one of them for the final target, almost no matter what, which is like so on the 5 minute here on the entry and using my MAs. It's not only a fib entry, it's also with the MAs. I mean, I've got the kind of spaghetti, but you see the blue, red, orange, blue, green, purple. It's like 9, 15, 30, 65, 100, 200. You got the 9 and the 15 came up above the 35, consolidating around there, started getting squeezed together. So did look like kind of a I mean, it's obviously also a break structure, right? This is actually why I fibbed this thing out because it's 5 minute open with a gap down. This is the futures open right here at 6. Opened with a gap down, closed that whole thing and broke this structure, right? And then it pulled back right to about the 50%. This would have been a good trade, but I just didn't take that one. But I think this would have been good. Early, but good. And then clear bullish structure, right? Um, so yeah, that's that one. And I want to focus. I want to remember this one for that one runner out of the group of five.
Did you close out all five? At
This was only one. This is only one because I was going to go to bed on it, but I did close out everything here. I close, of course, right. I closed my only one
yeah,
here. Because this was a really long. Normally, if I'm going to take five, I'm going to take most of them off at like I'm going to take some off at like either 10 or 15 or 20 or 25 or
yeah,
whatever the structure says. So this right here is like what to do with that last one of the five, I
yeah.
think.
Something that I use, like say the 161, you how it lined up here,
Yeah.
is the previous structure because there's no structure right here. So I'll look at this structure right here at first at the bottom and then at the top.
Yeah.
So I'll close some out here and then I'll close. So let's say I have three contracts. I'll lock one in here, one at the 161 and let one run up here with the trail stop at a moving average or a profit stop, right? So if it ever goes up and it comes back down, no matter what, I guarantee a green trade. Even if it even if it conks out at the bottom of that structure, like if it would have done like this,
Yeah.
I'm always putting a profit stop after my first target is hit. So no matter what, uh, I'm guaranteed a green trade, and it
Right.
won't reverse against me if there's a Trump tweet or some data that's released and it dumps down. Uh, I just that's something that Brandon has ingrained in us is, hey, always get out at a shy level or something because it might reverse on you. And he's always getting out a little bit early. Sometimes it goes up and continues going. Sometimes it's a perfect exit and then it dumps, or vice versa. So I've seen it too many times, especially from firsthand experience, is it shies it by a tick or two and then it fucking dumps. It's like, what the heck? Something that I've always did when that happened is I would mark off, I would put a horizontal line at the top of the wick or whatever it is, and then I would look back. Hey, I would look, is there a big red candle? Okay, that might have been a lot of bears in that area. Next time when I see a level, when it's coming up to my level, like when I enter a trade and I'm targeting this level up here, I'm looking back to see if there's any big red candles or big green candles at that level.
Okay.
If there's a big red candle, then I'm more cautious of, hey, there's a potential that this might pull back to 50% or to a moving average or to a daily level or weekly level before continue to go up or reversing on you, breaking that structure, and then confirming for continuation down. But yeah, I always try to get out a little bit early. And if you get reversed on and it goes red against you, definitely mark off that level. Whether it's the whole candle, I usually try to mark off where I got wicked out at. And that helped me to start looking back, looking left, always looking left to see if there's any candles that could have helped me determine, hey, that level might get rejected.
Yeah.
And if you see strength through that level, then there might be continuation to the next structure up here somewhere. But definitely always look back and always try to see, because especially with stocks, it seems to be that it seems to be that history repeats itself
Yeah.
and it always shows its hand. Because if there's a big red candle here, before it even hits that red candle, you'll start to see weakness. And then it'll pop back up to that top of the red candle and then dump. But
Yeah, that makes sense. I mean, right, because right here, this it's really hard to see because it's so skinny, but like right around here is the open of a big red candle. And if I go down to the 15, right, it's a lot easier. This price is right at the open of this large 15. So that's something I'll focus on this week, particularly for my runners.
yeah,
That
especially
makes a lot of sense.
like I told you like last week, I mentioned like look at break the whole zoom into that 15 real quick. So the way that I tend to look at candles is I break the candle into chunks of 50%, right? When price action is hitting it. So if you break this big red candle into 50% right here, look what happens. It slows down.
Right.
So bears are coming in, right? But then you start to see dojis. So then that doji level is your squeeze point, pretty much the 50% of that candle.
Yeah,
So,
this could have easily came back down. I see what
yep.
you mean.
So paying attention to that 50% of the big red candle or the structure, whatever it is okay, it got above it stayed glued to the 50% of that candle, right? If it didn't stay glued, like it just rejected it and it looked like a big old wick down, then you know the bears from that candle are coming in because they think that that level is a fair price for the bears. Whether where if the candle stays up here more full, then the next candle might squeeze. And it kind of did it right here, right? But then what did I say? Now break that up into the top 50%, right? Before the wick.
Hmm.
And look at it again. It slows down right before it gets into the wick.
Hmm.
So now, if it slows down, now the 50% of that wick is your squeeze point. If we get above that 50% of the wick, meaning the body holds above the 50% of the wick, then most likely it's going to squeeze. If it stays below the 50% of the wick, then maybe the next candle is going to sweep, take out the stops, right? It's going to stop loss, take out all these stop losses, and then go down. But that's something that I've is helping me determine whether I see weakness or strength in the price in the current price action. I hope
That
that
makes
makes
sense.
sense.
Yeah, it does. I'm thinking though, I'm thinking, all right, so if you're leaving a trade, if you're on a set and forget, how would you then implement that? Um, just put it as close as you can to the 1618 on like the halfway point of this candle and not get shied. Um, I guess it makes sense you're saying how to read it. And I'm thinking,
Yeah.
how do you action on it?
So kind of like usually what I tend to do is okay, the body right here before it gets into the wick lines up with the 161. I'll put it in between the two or at the lowest point. So it'd be at the body, right? Before it gets
Okay.
into the wick. But that's why I leave a rudder on because I know if it gets into the wick and it gets above the 161, then we're probably going to squeeze up.
Okay. Yeah, it sounded like something like taking into account the halfway point of each of these large candles in the structure as something that I would need multiple runners for, um, to take because even realistically, I mean, taking one here at the halfway point of this candle wouldn't have been bad, and then again, maybe at this split,
Yep.
and then maybe again at the 50% of this
Yep.
candle, and then again up here, but I just do not have enough runners for that on.
Yeah. And that's where you gotta, yeah, it comes with experience, right? You're gonna see like, okay, right here at this little overlap, where these candles overlap right here.
These, yeah.
So you can draw a zone or whatever. So I would start at the bottom and then maybe at the 50% or at the top of the body. And then I won't have another target until way up here. Knowing that this is like kind of like wishful thinking, right?
Hmm.
I want it to come up here, but there is a chance because of this overlap right here that it can reject right there too. So what do? You let it run and then you look like I would probably put it at this red moving average right there. I would attach a order, or if you're actively trading, then just keep an eye on that. Once price action hits that level or breaks that level, I'm stopping out.
Makes sense.
With the Ninja Trader, it makes it so easy because with Ninja Trader, you can actually attach it with the offset.
Yeah.
So I would do like a -2 or -4 offset. So if it breaks that level, I would get stopped out right here. Still above my entry,
Hmm.
still guaranteeing my green trade and letting the runner run, right? So either way, you got one up here or one up here. And you have to accept it and be happy with the trade. You can't be like, oh, I got stopped out, man. That fucking sucks. Man, I don't want to, you don't want to be like that. You want to be grateful that you had a green trade no matter what. Because once you hit your first target, you should not let it come back against you and break you even.
Yeah.
And I know Brandon uses a lot of break even, but me, I put it a little bit above break even to at least
Oh,
pay for
yeah.
at least pay for the commission of that contract.
Makes sense.
And since you already locked in on your first target, you're pretty much green no matter what. Yeah, you're gonna give profit back because you didn't lock it in, but just be happy with the trade that is green. Next time you're gonna learn how to read it, how to read the chart a little bit better or the candles, and then you're
Hmm.
gonna be like, all right, cool. Next time I'll give it a little bit wider stop and let it run. You,
Yeah.
with the experience, you're gonna learn to, okay, now I hit my first target. Maybe I'll put it on, maybe I'll put it at the blue moving average down here instead of so tight.
Hmm. Yeah, that
You
makes
know?
sense. And I think it's also these are I'm gonna go ahead and keep moving through them.
Yep.
Uh, these one thing that's tough is it's really two different trading styles. So I've got another trade here. Hopefully this exemplifies. Here's a good example of my point. Looks like what here? This was a Oh, okay, I see. This is a long I didn't take. I actually went to by accident. I didn't take it, but it's I'm just gonna keep it's two different trading styles in one because if you're looking for 100 points, you're gonna have to be able to tolerate a lot of pullback.
Yep.
But if you're looking to scalp, you're not looking to tolerate much pullback at all. So I think like trying to have a big runner is like it's mentally a little tough because it is mixing two trading styles in one. So
Yep.
it's kind of like so I've got some ATMs that have tight trails for the first three and then a looser for the four and then a really loose for the five. So just an interesting thing there that hopefully I can get show a way better example. But um this one here, so I actually accidentally didn't take it. So here's where I took my profit and then it pulls back pretty good. Um and we get the break of structure to the downside,
Yep.
right? On the 5 minutes now bearish break of structure. But on the 15, we're kind of just retracing the 50% of the squeeze leg. So then I'm just still watching. And then we get a break of structure upside, bullish. I don't know if it's here or here.
There.
Um, this one is the legit one.
Yeah.
Um, yeah, and then I fibbed out. I need to turn this suspender off. Where's my suspender? Um, yeah, and then it pulled back and I actually so I didn't I meant to take it somewhere. I don't remember where I meant to take it, but then I did get in here once it broke structure and then pulled back nice to this blue EMA, which is the 65, and I really like the 65 for like with trend dip buys.
Uh-huh.
Um, and I get in here and then I actually fat finger and just left it by accident. So showing this one as well as kind of like a taking profit, waiting for the pullback, and then getting in on a continuation. So I got in there, accidentally fat finger, closed it straight away. And then it actually went on to just kind of launch, and I didn't even really have target. I guess if I fibbed out the 15-minute leg here, this is my original 15 leg where I was targeting the 161. It gave a really nice pop over the 161, back test, and then straight to the 261. So I thought that was gorgeous, and even though I didn't actually take, well, I did take it, but I just accidentally closed it right after I took it. Um, it was a really great kind of learning picture, right? Of
Yep.
just
And
how squeeze structure can continue.
and that's a great example of putting it into context. We talked about this play right here in the introduction, right? We said, hey, is it with trend? And it's gonna pull back break structure on the 5 minute to base and then continue squeezing up,
Yeah.
right? And we're like, we're at all-time high area zone, whatever you want to call it. And
Hmm.
it can squeeze because there's going to be a rush of newbies coming in buying the tops.
Right.
So, and usually the market likes to screw over shorts. So you have to be able to read it in context, right? Because this easily could have been a break of structure on the 5 minute to flush back down, to retrace, to retest the
Yeah.
weekly trend or the weekly level or something, daily level maybe. But that's when you can get faked out. And that's why taking break of structure at the top is a little bit riskier than if you waited for maybe two break of structures, right? So it would have been like we broke structure here, right? And then pop back up and then wait for another break of oops. And then wait for another break of structure, right? So you have one, and then you would catch the second leg or yeah, it would be the second pullback. So not the first pullback, but the second pullback. So then you would catch this one for a little bit more confirmation down
Yeah.
instead of taking it here, taking it here, and then you can get squeezed out like it did right there. If you would have took it right there or something like that.
Hmm.
And that's an
Yeah.
example of, okay, is it with trend? And then what part of the trend is a structure break happening in? Is it at the top? If it's at the top, there can be a blow off, right? There can be freaking, hey, if we broke structure to fake out the longs, take out their stops, and then smoke the shorts and then cause a violent squeeze because then we broke structure right here, pulled back, and then we really broke structure, right? Because we
Yeah.
broke this one. And then
Uh-huh.
this one has more support up here once it breaks. And that's why it slows down right on top of it. Like it breaks down and then it does a fresh low.
Yep.
And that's where it did the fresh low because like it based right above it and then right at this structure right here. See where that structure is?
Hmm. This off
Squeeze,
the top.
squeezed it
Yeah.
because it's trapping right here. It's gonna entice the shorts, trap trap them, right? Because we took out the lungs here because we thought it was gonna go down. They got stopped out because we broke structure, and then we trapped the shorts up here. They got happy, and then they got squeezed out. So it's trapping both, and then at the top, it's a little bit riskier. Uh, whether you're catching the second one, it's even better. Just like I said, the better defined the structure is, the stronger support or resistance that level is.
That makes sense.
And then right here on the 15-minute, you're with trend, right? So trend is your friend. It's still not broken on the 15.
Yeah, absolutely.
And this pattern right here, the rising wedge or rising bull flag or whatever, sometimes it fails. It goes this way. But most of the time when that does, there's like a base right here. It'll do a fresh low and then squeeze up. And then another thing is like, hey, it's not letting it fall, not letting it fall, not letting it squeeze. Okay, what do the indicators tell you, right? We're bullish. We've been bullish. So that's another thing that you can look for.
That makes
There's
sense.
there's another thing to look for, right? Like if this would have been on the downside down here and the RSI would have been down here, then most likely this dump, the break of structure would have failed and went down. But look at when it does a break of structure, everything is bullish, even over here.
Hmm. Yeah, everything. Everything's entirely bullish.
So when you start to see break of structure, you need to take into consideration, is it okay, we're at the top, but MACD still shows bullish, RSI still shows bullish, top channel, and I'm at the top. What can happen, right? You can get faked out because, yeah, we got break of structure, but indicators say bullish. And it'll take time. You need to, I don't know how you look at your screen, but you need to come up with the system of, okay,
Hmm.
I see break of structure on the screen, on the chart. Now, what do you look for? Do you look for moving averages or do you jump down here and start looking like you're reading a book, right? Up, from top to bottom, and then left to right. Because
Yeah,
you want to see this, right? Or are you zoomed into this little chart? You don't know, you get tunnel vision. And this was me when I was brand new. I was like, oh, all right, cool. We got trend going up right here. We got this. And then you get faked out, you get a fresh low, and then it squeezes, and you're like, "Ah, I know that I knew that I was gonna go to that level." Okay, yeah, you knew you were gonna go to the level, but how are we going to get to that level? That's what you have to start getting experience with, right?
right.
there's a couple ways that we can get up to this level. We can do a base, fresh, low, squeeze. We can do a higher low, sideways range, trap the freaking shorts, dump it on them, or trap the bulls, dump it on them, and then do a fresh low, and then squeeze out the bulls, right? Um, you just gotta keep practicing and studying. Okay, where did we come from? Where did we come from? Where could we potentially go to? And yeah, good example.
Makes sense.
Uh,
Makes sense to me. And how I usually look at it, I'll just keep going through, and maybe my next one will have an example of it, or maybe not. We'll see. Um, if the picture's big enough. But I'm usually looking at the four. Yeah, I think this actually does, unless it clips off. I'm usually looking at a four panel. Yeah. So we use an example. This is and this is like the first one here. So I took last week 17 trades, and the first one that I showed is this example of this runner long, just a one micro runner long. And then these here are like it's like this scalp that I'm like trying to see how to mix. So usually I'm looking at this four panel where I've got the one or the two, and then the five, and then the 15, and then the hour. This is the 10 right here, but usually it's the hour.
yep,
Um, so here I just took a bunch of scalps. I don't know if I was gonna pop this one up and then maybe just go past it. I don't know if you had, if just in looking at it, you had anything you'd want to even say on it. I just took, this was what I think right around, yeah, this was later at night around 9. And I just knew I wasn't gonna have a lot of time to trade the next day, and I was like, I think using the structure and take some like 5 point, 10 point scalps around here. So here's the five on the right, and then on the left, the 1 minute, where I was taking like this started like multiple full body 1 minute candles, a little tiny bear hammer, broke that, got in for the momentum, closed here right above the split, got taken out break even. Um, we started a little downward structure on the 1 minute, just with a break here, kind of
yep,
like weak. So sold there, closed one at the full body red, break even, broke that structure again to the upside, got in just like Momo, closed one on a full body 1 minute candle, another break even, and then just like waited for a while and then started flush. And I don't like this one, but I got into it because this actually, as soon as I closed, it actually immediately like really V'd.
yeah,
And I was like, this was bad. Like these were like, this is like fast paced, like a little bunch of little scalps and they all worked. But I think this one was like bad. So then I just called that for the night.
yeah,
Um,
yeah. Because look at look at right here, and when you see price action hitting a certain level 3 times, so hit it once, twice, 3 times, at always, especially 3 times. Um, it's a base to me, right? And then we get the fresh low right here,
yeah,
and then the squeeze
fresh low squizzle.
right here because it's the 1 minute. You tend to get scammed out a lot. Either way, the best trade here would have been from here to potentially up here. And if you would have
Hmm.
entered here, you would have got some drawdown there, but it shouldn't have stopped you out. This this little pullback. And
Yeah,
you could have got it all the way to here. As that's the way that I use the moving averages. I'll say, okay, we busted through this moving average, right?
yeah,
So you can catch a move up to retest that level, right?
right.
And then we have structure up here. So those are your potential two targets that you should be looking for. The moving average and then the structure tag.
Okay.
And always look at a moving average. We break through that moving average, we need to retest that moving average. Like right here, look, we broke through all the moving averages and then we start back testing them. Boom. And then the next
Yeah,
one, boom. And then the next higher up, which you don't really have one, but we busted through it, pull back to a moving average support, busted through, pull back, moving average support. Once we break through and there's no moving averages right here, the next stop
yeah,
is this one. Take it
yeah.
up. I don't know if that's
Makes
a moving
sense.
average or a VWAP, but
Yeah, that is mood. That's the 200.
uh
Yeah, and that's where I'd bring in the other time frames. If I go over here, then it's like, all right, there's nothing higher on here, so then what's on my 5 minute? And all that retest, that's often what I'm using all of them in conjunction of and structure at the same time of like for example, here you get kind of like maybe a bit of a structure. Like this is some structure that was broken, but it's not. It doesn't really look like a structure break. But what you do get is the 5 minute MACD flip upside, and you do get a break of the 50 on the RSI.
yep,
And then you get a break of my two quickest EMAs, the blue and the red. And then it comes back, it back tests them. It gets a little under the 50, it gets a little under these EMAs. And then it's like, okay, now we could go up to full tag the orange or maybe get all the way up to the 65 and 100. That's kind of how I'm looking at it. I mean, honestly, it's pretty much the same stuff you're looking at, just different MAs.
yep,
Not the same stuff. You're looking at a lot more structural stuff like splits and stuff that I'm now putting into play. One thing of yours that you talked about a while ago that I have incorporated a lot is the dojis.
yep.
The doji hopping, you call it at some point. So there's that, and then put down some notes here to look more at specific candle 50% and the tops of candles. I mean, here's another top of candle example. It's like you get
Yep.
this doji if I were to pick the bottom, which I don't really want to, but it wouldn't have been terrible because you got the nice 5 minute or big time 5 minute RSI divergence
Yep.
multiple times. Um, and to eventually go for the pick, and where does it come up? Right to the top of here before pulling back. Um, so that that makes sense. I mean, break, retest MAs. That's something I look at and continue paying attention to.
Yeah, just try to read it like a book. You know, if you have a break on the 5 minute, I mean on the 1 minute, okay, do we have it on the 5 minute? Yes, no, okay, we do. Okay, what is there divergence on the 1 minute? Is there divergence on the 5 minute? Okay, looks like
Hmm.
we're beginning to gain strength to the upside. Okay. If we're
Yeah,
beginning to gain strength to the upside, where can we squeeze to?
right,
In correlation to where price action is,
right.
right? If there's no levels above, well, then that means that there's no resistance. But if we're not at all-time highs, if we're not at all-time highs, we're going to use previous structure, right? Because if there's okay, this is resistance, but above here, there's no moving average resistance. Okay, but there must be structure resistance, and it did. It ran into it right here on the 1 minute.
Yeah, yeah. Which on the 5 minute is the clear. Actually, again, coming to the
Uh,
top of this candle here. So this is this. I'm pretty sure.
Yeah. And not only that, but you have that doji. It's just look, it
Yep.
breaks this doji, retests that doji, comes back, creates another doji. So it just goes from, I don't know, something that Brandon has stressed since the beginning of the elites is dojis. Always
Right.
pay attention to the body of the dojis. If it breaks above the doji, then look at the top of the wick. And just like that 50% strategy that I told you, if it breaks above 50%, then it's probably going to squeeze up.
Right.
Uh, and then you have to look to see if it's going to sweep. Candles like this big green candle right here, it swept all the stops right here. All the stops that were right here. it took them out.
Yeah.
And
And
then
then
it
formed its
and
giant
then
wick.
it goes, yeah. That's what you want to see when it's coming up to these levels, these resistance. Does the
Hmm.
candle look like this?
Hmm.
Or does it look more like this big green candle getting stuck to the top? If it's getting stuck to the top, then start looking for a squeeze point. And
Right.
like I said, a squeeze point, see this little shelf right here?
Hmm.
That could be a squeeze point. And look at most of the time, these little shelves will line up with the 50% of the wick.
True.
Most of the time.
Okay. Write that shit down too. Yeah, the nodes, I know you've talked about the VP nodes for a while.
Yep.
Um, that's
And
probably out of everything the least that I look at.
yeah, especially if you have trade away. Look at this big void. Volume needs to fill this in.
Hmm.
And the only
Yeah,
thing that pops out is this. And look at what it lines up with dojis.
true.
So if you don't have a chart that has this volume profile on the right, then just pay attention to the dojis. Most of the time you will line up with the profile. And most of the time, these shelves and these dojis line up with bookmap.
Right.
When Kyle was doing bookmap, I was like, oh, okay, look at I have a level two. I have this shelf or I have this doji right there, and it lined up within a point or two from his bookmap level. I was like, it is. That's because people think that shelf or that doji is a fair price. But then you got to look back. Okay, there's a red candle there right after the doji. So what's that telling you? If we come up to this level, most likely there's bears at that level,
Hmm.
right? So if you're in a trade going up to that level, you should be like, okay, we got past this structure. Okay, next one is up here. If I start to see price action slow down, smaller candles like this, then I should be cautious and maybe start looking to potentially take profit because this shit can dump. As soon as it hits that level, it can fucking just bleed and dump. And you gotta be on your toes to get ready. Like, okay, if it hits that level and I see a hard rejection, I'm gonna lock some in right there, or whatever the case is. Right? I'm not gonna let it come all the way back down here, or tell yourself, hey, I got in down here. If it breaks this support, I am profit stopping out. There's something that told Starscream is when price action is going up to your level, you don't want to, you want to see it magnet to your level quickly. You don't want to see it higher low or lower high into your level.
They got your level quickly. Okay.
Know what I'm saying? Like, okay, like see like right here, say you had this level down here as your level. See how it quickly went to it,
Yes.
right? Versus like what can I show? Okay, like so now let's just take it in this context. Like let's say we're going, you want to go let's just say you want to go short right here, right? Because we broke your level down here.
Hmm.
But now it's higher lowing into your level. So what can happen? Hit you enter your trade right there, it goes with you, and then it squeezes you out.
Oh yeah, okay.
You know what I'm saying? Instead of like going like let's just say this was your level down here. Well, let's just keep the same level, right? But
Okay.
you entered long here and it went straight to it, right? it didn't it didn't lower high into it.
Okay.
How can I explain it? I'm not explaining it right.
I think maybe you're saying you want to see change of structure around your level.
Well, like you want to magnet your level. You don't want to see like let's say
Oh, like this 261. If this 261 is my level, I want to see it slam up into the level so then it can be out of steam and break structure in reverse.
yeah, you don't want it to see how right here like right here is perfect, right? This box, right? Because it came back to your level. Like say your GP is your level, right?
Hmm.
It breaks a GP within like 3 to 4 candles, it hits your level, and now you can take it because it's continuation, right? It didn't lower high into it. It didn't it didn't do this. It didn't go like this and then create a lower high and then hit your level, right?
Ah,
No, now you understand what I'm saying?
yeah.
So it came back lower high into your level because right there, especially if this breaks structure and then it hits your level, you have a break of structure and it can do this, boom, and then go down.
Okay.
Versus like this, where it it came back into your level and then you can squeeze it. Versus like this, lower high into your level and then it dumps. Know what I'm saying?
Yeah. Yeah, I do. I think I see what you're saying conceptually. Um
And that might
Hopefully
take
we can
some
find
time.
an example.
Yeah, go for it. Go and jump into the next trade.
That
But
one's pretty nuanced. I know it rings a bell of stuff Brandon's talked about.
because you want it to, if you think about it, if it looks weak like this, it creates a lower high on like here's your level, right? Versus here's your level. Which one would you say is stronger, right? You have this one, or you have,
Right, like a clean break of the level.
right? And then this is gonna hit your level, and then you're like, well, I got in long because it had breaker structure up, even though these were both breaker structures, right? Let's just say it did like this, right? We broke structure, we came back, tested it immediately. That has more
Yeah.
strength versus we broke structure and now it's lower high and it's oh, and then it's like, oh, I got in long, and then it fucking dumps on you.
Break level magnet. That makes sense. I think
And th
there's actually we looked at an example like that. Um,
and that's the type of shit that you need to start like discerning. Okay, this looks like
hmm,
a good pullback. This
this one
looks like a weak pullback. Yeah, exactly.
breaks it, magnets it quick, no lower high, continue.
Exactly.
Okay. And then this one actually, yeah, this is an example of the other one. Actually, this is a perfect example of the other, the bad one where it comes up, it doesn't really break it, it shifts around, comes up, and then it lower highs right here. And it does look pretty, it doesn't look great, but then it managed to get off the squeeze and start grinding.
Yep.
And the squeeze really isn't that good. This, oh yeah, now I can compare, right? This squeeze, if I compare, I mean, this is also perhaps due to the time, the session, but I mean, this squeeze is so obviously better than this.
Yep.
So this is actually right here has both examples what you're talking about.
Yep. Yeah,
Awesome.
because you get the lower high right here, and you're like, oh shit, we might not get that great squeeze versus it breaks a level and then it fucking squeezes.
Yeah, that makes sense. Yeah,
And
because
that's
when I
another.
got in,
Go
mhm.
ahead.
I was saying when I got in here, I knew it's about kind of accepting it because when I got in here, I know this didn't feel too good, but I was like, you know what? It's one micro. I'm just gonna leave it.
Yeah.
Um,
Well, not only that,
so
the other thing you got to take into consideration, there's no price action right here, right?
yeah.
So taking this, you can take it up to here for sure,
Hmm.
potentially to the 161,
Hmm.
right? But you might hold this trade longer
Yeah.
versus there's like a 15-minute trade right here versus a 5-minute trade right here.
Yeah. Makes sense. This is actually one of the longest trades. This right here was actually an 8 hour trade or something, 7 hours, something
Yeah,
like
yeah,
that.
yeah. Overnight.
Yeah.
And then
Okay.
you can use that in the longer time frame, right? So if you use it on the 15, 30 minute, then you know you're gonna have an hour or two of long versus 15 minutes of long.
Right. Use that in the 30 minute. Okay, that makes sense. And that's the type of stuff I am looking for currently because I look at the one, two, I'll say the one, the five,
Yeah.
15, 60, is I really am trying to look for that. I want to one day in one session, catch the 400 point micro. So, but here's another one I took. This is an example of what I was talking about that I generally look at with the MAs and the
Mhm.
MACD and stuff. So we get a really strong, this is the 5 minute over here, really strong structure break. And then it's like, obviously if you fib it out, the 50 is gonna be down here. So we didn't even touch the pocket. Maybe this was like the 61.8.
Yep.
Um, but what we did have is a back test of this whole MA bunch here. Um, So I got in here and I can go on to the next one, or if you have any thoughts on the entry.
Yeah, because look, it
Ah,
comes back and tests the structure that you just broke.
yeah, these dojis.
I
Yeah.
would I would have put a horizontal line right there.
Hmm. Yeah, that's something I got. I usually don't trade. I haven't been at my computer. I was up at my girlfriend's house. I'm now down at my new house where I'm gonna live at. Um, and and I was on Trade Normally on Ninja and on Trade you got to click the button and everything.
Yep.
So I'm gonna look to put more lines, and this is an example of I had two accounts here, so I had five on each.
Uh-huh.
So this is 10 total. This is my sizing here, and actually, so I guess maybe by the end of this maybe I'll continue the five for maybe like another week or so while I continue the buffer. Right now I've got a 3K buffer on them. Um, I'd like to get another 3K, work my way, maybe get up to 10 micros. So, um, I can think about the exact science of the sizing later. Don't want to switch topics to that. But yeah, the long it breaks the structure here, comes back, tests the structure, tests the moving averages for what's that worth, tests the 100 EMA on the 1 minute 100 EMA.
Yep.
This is BRT EMAs here. Um, and Yeah, so I got in there. I'm glad you liked the entry. I mean, you got the back test to the 50 RSI. I know I was waiting for that too. I was like, I'll get that. I'll look at the 50. I'll get here. Came back, did all that. I got in, and then it actually starts going against me a little bit. Um, this is why normally I try to wait if I can for a 5 minute candle to close, either buying the close of a red or even close of a green, whichever. But trying to do that. Because I could have bought the close of this red. I've been in just a little better, but so it pulls back against me a bit, and then ultimately pops off. And what I still had, dang, did I really not? Okay, it might be in the next picture, but I got out four of my five, um, taking profit through here. I drew this trend line. I got out a bunch along the break of the trend line. The 1 minute candle closed, so I got out there. We got another full body 1 minute green, so I got out one more there. Um, and then Yeah, that was that one. I mean, obviously green. Hopefully on the next picture, so that was trade seven. Hopefully on the next one, it's got what happened next. Um, let's see. Yeah, actually. So then it actually came back. I was holding it to see if we could get all the way up here.
Yep.
But ultimately it came back down and I stopped out, I think too low. This is why I don't like break even stops either. Because a lot of the time it does this. Hits my break even and then bounces.
Yeah, because
Um,
you're stopping where you're. I mean, look at where the like me. I would look at these 50%, and if we break back below there, then we can come down to right there.
yeah,
Same way you read it up, you read it down, right? So we get above the 50%, cool. We're above it, we can go potentially up to here, right? But we do have some resistance here and here.
yeah,
So look at how the body's almost at these wicks. So as long as these bodies are not closing above that wick, when we know that we could pull back, right? And this is where you can be like, okay, if we're holding resistance here, where can we pull back down to? Pull back down to this structure right here.
yeah,
So what you're telling yourself is, if we break that structure, I'm stopping out instead of BE. Because now, so first we have this structure right here, but then we have a small little structure right here. And we have a big green candle there. So this little thing right here, it can pop. So you got to tell yourself, if we break this, I'm stopping out for a potential re-entry
hmm.
off of here to go up,
That makes sense.
right? Or if it breaks this structure, you stop out red, you still get green because you hit your first target, but this went against you a little bit. Like it breaks that,
Yeah,
you might do that. And that's a conversation you have to have internally is, okay, we didn't break above here, or we did, but we didn't hold above there. So now we can pull back to where? The moving averages or structure, or
yeah,
if you have a fib down here to the GP.
yeah. Hmm.
You kind of have that conversation. Okay, if we break this structure, where can we go to? Okay, we can go to here. If we break that, then we can do a lower high into the GP.
Hmm.
Okay, if we break that, right, I have one chance to get out at break even, which is right here.
Yeah. Oh yeah, true. That makes a lot of sense. Okay. Yeah, I see that a lot actually, that where I'm like, okay, because I like the trail, just for I like the ease of the trail, but I know that it being easy also probably means it's not that good. It's not the best. It's not optimal because it's easy. And what I see is a lot of times, like if I was going to trail a candle, it's actually better to imagine the trail and then don't stop out at the trail and then get out green
Yep.
is what I see a lot of the time. So maybe that's something. I mean, because I'm thinking I've got five, right?
Yep.
And I'm like, I either if I go back to this one, but I want to take at least half. And if I got five, my options are less than half or more than half. It's either two or three.
Yep.
So it's like I gotta take more than half. So it's like either, and I don't think I took these too soon. I'm happy with how I took them. It was like almost, I mean, maybe it was a little too soon. It was only 10, 15 points.
No, because I mean, you took
Um,
this one, like this one right here was good, right? And then it got
yeah.
strength. And then where's that other screenshot? Because I know there was structure right here. I know you had a
Uh,
line.
right here.
Was it
Or
that?
maybe it's this one.
Because
Or
we're
this one? Oh wait.
there. You go, right there.
Oh,
So
it's like
so so,
popping.
so you
Yeah.
have that wick way up here.
Yep. Yeah.
As soon as we break back below that wick, then you need to be like, okay, I'll lock some in at this structure for a potential target up here. What was that line right there?
This one,
Yeah.
that's actually just the current price line on Trade.
Oh, I was gonna say, if there's any structure or anything over here above this wick, I would look for it.
That makes sense. Yeah, and then I suppose
Which it
what
looks
I
like it might have been right
let me go
here.
back to it
No, not
here.
even there. Yeah, because the bottom of that doji hammer right there, that wick.
Yeah, I mean it's these wicks and there's these dojis.
Yeah, I always pay attention because sometimes when it hits like this wick right here, it rejects hard. And it did on this candle. As soon as this wick right here hit this wick.
Yeah, that makes sense. Okay. Yeah, what I'm thinking is either maybe scale up just to like one more micro or maybe two more, get like six or seven on deck. So then or for my fifth one, don't go break even like this, but actually leave it at the original stop. But
Yeah,
I'll see then.
just be careful because like I said, this can easily not even come back to your entry and you should have just stopped out right there.
Yeah, that's true.
So that is something that I cannot tell you what to do, but I can tell
Yeah.
you to just gain experience and watching that candle develop is how do you think like today, right? I was in long and I showed you guys a screenshot. My target was up here and then I was gonna reverse because I said I wanted to pop to short, right? So I was gonna long from here to here
Yeah.
and then get out. But then I started seeing it, it wouldn't let it squeeze up and it wouldn't let it dump.
Right.
So then I started looking back and I was like, okay, I see this wick over here and it wouldn't go above that wick, 50% of that wick. I was like, okay, it looks like the bears are gonna pull it down before it squeezes up. And that's exactly what happened. I said, okay, so I'll get out $40 green, right? Let it pull back. And then I re-entered long to
Hmm.
go to go up. And then I was like, okay, that was a good decision. And that's just from me watching those fucking candles develop. Okay, it's not going above 50% of this body or 50% of this wick. What's holding it down? Oh shoot, there's a big red candle over here, so they might squeeze it down. And then I see a big green candle down here, so then it's gonna hit that and then go up. But yeah,
Okay.
that's something you're just gonna have to experiment with and be like, okay, what I locked in one target. Do I want to break even? Or, okay, say your first target is 200 bucks. You're halfway to your target. Do I want to give some green back? Right?
Right.
Do I want to break even to a potential re-enter?
Hmm.
Or do I want to give it room to breathe and hit my target?
Yeah, that is a tough part. There's like having a hard stop protects you from the massive like candles that can randomly occur, like the Trump tweets, but it stops you from using your discretion.
Yep.
So, but here, I guess on here, I saw that I thought I got just wicked out on my runner. This one I was actually annoyed at. This was so on this week I took 17 trades, 14 longs, and happened to also be 14 wins and three losses. And then this one, I got back in here on this runner, but I only got in one. I was like, I'll get back in my runner, even though I'm getting back in 10 points above my entry. And then launches almost 30 points, right? And I don't take it, and then it actually turns around into a loss. So here's a trade I showed where I got in five. I was getting out along here. Right, comes back, hits me break even. I got back in, launches up 27 points, and then I let it come back down for a loss. And I'm like, I was like, I don't know, I don't know what's up with that. And then what actually, while I got
Like
trading you
25
up,
points, you have to take, you gotta lock some
we
in.
got
That's
right.
something that Brandon has always said. Like when he's scalping super quick,
Hmm.
10, 12 points, 20 points on NQ is okay. If it hits 20 points, I'm locking in some. Or if it hits 11 points, I'm locking in some. Right?
Right.
So like that, you locked in 11 points, so now it has to go negative 11 points for you to break even.
Yeah.
But it's always easier for you to end the trade green and re-enter than than be green, in the trade red, and then re-enter. You're gonna
Yep.
get you're gonna get fear. Fear is gonna fucking stop you from taking the trade that you actually should have been taking instead of the first trade.
Right, for sure. That's like every recap has its own lesson. Like the first one is the runner lesson. Um, and then this scalp one, that was like, normally I'm not really trading like this. I just wanted, but I was like, I don't, but this was after hours. So I was like, I know I can't be like holding for like 20 points and stuff. So that's why I was taking smaller profits. So, contextually, I think it was the right thing to do. And, and it's like, this is how it feels when it's on a, when I'm on a roll, when I don't have that fear.
Yep.
And then when the fear comes in, it's literally like the exact opposite. Like this would be a short, and then I'd close as soon as it's red,
Yep.
and then this would be a long, and I'd close as soon as it's red, and it would turn around a short, close as soon as it's red. So just keeping that in mind is the lesson of that one.
And that all comes from experience, screen time, screen time, screen time. Like
Yeah,
even though I'm done trading by 7 o'clock in the morning, 6:30 in the morning, I'm still looking at the chart. I'm still calling out plays to see if, because sometimes when I wake up, I feel like I'm in sync with the market. I could call every pullback. I can call every bounce. I
yes,
can dialed in, right? But sometimes you're like, it's gonna pull back here, and it doesn't pull back. You're like, fuck. Okay, and then it pulls back on the next pullback right to your level, and you're like, fuck. Now I can't take it because it's looking weak or whatever. It's like, okay, but that one squeezes. And you're like, what the fuck? Well, you hit your level with the first time it pulled back, it shied your level. And what does Brandon always say? When it shies your level, it's most likely gonna do the opposite and then come back and retest it.
yeah,
And with NQ, most of the time when it retests it, it slips that level and then it squeezes in your favor.
yeah,
Those are just, I guess, tricks of the trade that you have to pick up. You have to pick up. And the only way you're gonna pick it up is with the experience and watching that fucking candle develop on the screen.
right.
It's, it's like shooting a gun. Slow, steady squeeze, slow, steady squeeze. Okay, slow, steady squeeze, but you still jerk and you still miss your target. That's because you know the strategy, but you're not following the strategy.
That makes sense.
And everybody can have the same fucking strategy, but have different rules for that strategy.
Hmm.
That's why Brandon
Yep.
says we're all gonna have the same strategy, but we're all gonna look at it differently. Some of us might take the first tag. Some of us might wait for the candle to close. Some of us might wait for the candle to slip the level and then get in. It's
Right.
just what's your pain tolerance and what's your flavor? What style do you like? Do you like to be a little bit more cautious or do you like to be a little bit more riskier? And as you get experience, more experience, be like, okay, I could take a trade here and I'll manage it. I could take a trade here and it's gonna go in my way. I could take a trade
Hmm.
here. I might have to hold through some pain, but it will hit my target.
Right.
Uh, yeah, I noticed that you're taking less trades and you, like you said, 17, you're four at, I mean, uh, 13 for 17, which is pretty damn good.
Yeah.
Uh, on those red trades, were they short?
It was. Oh, I put this in the list. Short. One was short. One was long. One was short, long, and where? Short loss, long loss, long loss. Two were long, one was short. There wasn't a big bias on the difference.
Yeah.
Yeah, but I still want to focus on one direction. I am still taking shorts.
Yeah, because
But
you
it's just
talked
like,
about a couple of shorts, but not, they weren't as, they weren't that big of a target for your shorts.
no, yeah, it was like
So,
scalps.
so you might be better at longs. And I think just being focusing on one side or the other, that's gonna
Hmm.
help you laser in that strategy even more, right? Because you're gonna know how to long a counter scalp and you're gonna learn how to long a trend
Right.
trade. And once you get those nailed down, now you can be like, okay, now I can now I can add shorts because I can see along perfectly. So if you're ever in a short and it's starting to reverse against you, now you already got that nailed in, so you know exactly what a reversal looks like.
Hmm. Yeah.
It's instead of not knowing what a reversal looks like, you're in a short trade and then it fucking V reversals and you're like, what the fuck?
Hmm.
Now you can be like, okay, when the candles look this way and I'm in a short, I need to think about taking profit, letting one runner go, letting a break even stop or a profit stop, uh, and just letting it play out.
That makes sense.
Uh,
Um,
but yeah,
I've got a few left, and I'm wondering at the end here. So we recapped a lot of good trades, one small loss on that long runner trying to re-enter a runner. And and then I've got yeah, here's another actually example of I'm thinking about, it's like I think some it's tough sharing losses. It's like when you're looking at losses, it's like try to not focus on what you did wrong, but what to avoid.
yep,
You know, here's another long, for example, where I was up 20 points and actually came back down to break even right about here. But then I've got these here. I guess here's something I want to avoid. I don't know how close we are to the hour out, and maybe this is coming up on the last one.
let's
Um,
recap.
yeah, this one here, something I want to avoid is actually, I was ranting in the chat the other day. I was like, why are people trying to call the top on
Uh-huh.
this run up? I was like, that's not what I was like, sure, a seasoned trader can call the top off of a level
Yep.
and take a scalp, sure. But why are us? I think novice is kind of like weightlifting. Like anybody with less than 2 or 3 years weightlifting, I would call a novice.
Uh-huh.
And anyone with like, I mean, anyone with less than 2 or 3 years of profitable trading, I would call a novice. So it's like, why are us novices trying to do that? And then here's actually, but that doesn't only apply to shorts. You know what I mean? That also applies to the longs. So it's like here, I got into what could be like a little fresh low scalp long. Sure, this could be something that you could see a good trader perhaps taking. It's a really strong bull hammer right off of this strong low. Sure. But then I got into more longs here without even a structure break. Um, on this 5 minute candle. On the 15 is clearly in a downtrend. We got the hourly over here, clearly broke structure and is now downtrending. And I got into this long and then ultimately held it for too long. I think I held it for like 20 points and stopped out here. Uh, so I'm like, this right here is something I got to avoid. This was one of my, so it was 14 out of 17. This was one of my three losses. And it was a pretty nasty one. I mean,
So this stop right here should have been right here when it came back almost back to your entry.
yeah, 100%. And I saw it. I was like, oh, we made a new low and it came up, but then I just didn't take it. I was really about to. I remember I was about to, and I didn't. And then it did this, and then I had this opportunity, and then it came back down. I'm like,
Yeah.
why did I do that? Like, so here, that's something. I mean, and that right there is like, I guess
That,
if I find myself in this situation, I need to take it out here.
well, think about it this way. You need to have that conversation with yourself, right? Okay, I'm in here long, right? I'm in here long. What can happen? Okay, we got the base, we got the fresh low, and we got a squeeze down here, but it didn't squeeze to break structure back up, to go up, right? So what can happen? We broke structure on the 1 minute. What do I usually say when we break structure on the 1 minute? That's a signal to start looking for a potential short, right? Even though we're in a downtrend here, we can we have a continuation break, right?
Uh-huh.
We have a continuation breakdown, and we got the fresh low, but we didn't get the squeeze. So now we need to look for
Hmm.
a break of structure on the 5 minute, which we get right here too. So now we gotta break a structure on the 5 minute. Now what can happen, right? Now we can get a retest of this structure here
Hmm.
to continue going down.
Yep. Yep. And even though it's so low, quote, 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 so low, it can keep going down.
Yep.
There's nothing saying it can't.
The market can do whatever the fuck it wants, when it wants, wherever it wants, right? But
Yeah.
it's you that having that internal conversation with yourself of the trade is going to help you be like, okay, we got broke a structure on the 1 minute to the downside. We can get continuation to the downside. The only thing stopping continuation to the downside would be a break of structure on the 1 minute back up to the upside,
Yep. Yeah. 100. Yeah. 100%.
right? If we don't get that break of structure, what can happen? And I need to start planning a contingency plan, right? We always have a contingency plan in case shit hits the fan. Shit hits the fan here, we didn't have a contingency plan, so we hold for longer than we're supposed to.
Right. There was no contingency. Yeah. It wasn't. I was not ready to 100%. I should have got out here. That would have been the contingent. I mean, at least I stopped out. But like, if this
Yeah,
just kept flushing, where would I have
yeah.
gone? Where would I have gone? I don't know. So I got to make sure to avoid that because this right here, I'm going to get onto the, I'm going to pull up the next one. Um, this right here launched me right into a tilt because then after I stomp out of that long, you'll never guess what I did.
You shorted the bottom.
Damn, bro, you guessed it. I shorted the bottom and then did the same thing where it absolutely popped on me, comes all the way back towards my entry, and I don't get out. And it's literally like a mirror.
Yeah, the same conversation inverse.
It is the same thing in reverse. So I was like, I wanted to go through like I said, I didn't know how much time we had, but I wanted to make sure I went through these because this right here, like the not taking profit on the stuff back here, it's not great, but it's not the worst because I at least got out break even. These right here, this is like what absolutely 100%. It's like the good, the bad, and the ugly. This
Yep.
this has to be avoided at all costs. This is unacceptable.
Yep.
So,
Maybe creating a rule for like if there's break of structure and I'm trying to counter trend it and I take a fat loss, I will not trade or something to that effect, you know?
hmm.
Because this looks like you were counter trend trading it right here to go up and you got your scalp up, but you just I don't know. You wanted more.
I
And
wanted
some
more.
and sometimes that greed can turn a good trade into a bad trade, right?
100%.
Because that greed could have been like, okay, I'm up 10 points. I'm up 10 points. Should I fucking take profit? No, I think it's gonna get all the way up to here. It can, but this is that conversation that I have with my friend Starscream. Is like, yeah, it can go to that level, but when is it gonna get to that level, right?
Hmm.
It can happen. It can happen tomorrow. It can happen in 10 minutes. It can happen in 2 hours, 3 hours, whatever it is. But do you have you need to have that criteria, right? If I'm gonna fresh low squeeze it, okay, where can it fresh low squeeze? Off of this structure right here at the bottom. Okay. I'm getting in at the first tag. I'm not gonna wait for it and I'm gonna have a tight stop.
Right.
Whatever that conversation you're having with, you need to start having that conversation with you more often and not get so locked in to one bias.
Hmm.
Because that break of structure bias, right? Because you got in short down here, and then we broke structure, and then we came back to your entry,
Yep.
and you're like, okay, what can happen? Well, we got a big green candle there and a medium candle there, so we can squeeze back up to this structure right here,
Hmm.
potentially, higher low, because this is a higher low.
Yep.
Just remember, if you're going long, right, you get the break of structure. After the break of structure, what are you looking for?
Back test.
A back test? Not only that, but a sequence, a continuation,
New sequence. Yeah.
right? A continuation of that sequence. So the sequence started right here, created a higher low. So a continuation of the sequence is a higher low, right? We got a higher high. So now a continuation is a higher low.
Yeah.
We got a higher low. So now the next thing is a higher high up here,
Hmm.
right? To continue going in that sequence. You don't get a
Yep.
higher high, you get a lower high right here, but we're still in a higher low. I mean, higher high, higher low, lower high, still a higher low. So now we can potentially go for a higher high
Right.
because that sequence started.
I think ultimately it did that actually. It turned around and actually it squeezed all the way back up here because I remember the reason uh I was I don't know why I wanted a little bit more and I wanted it to get up to here.
Yeah.
Um up towards and then potentially towards this gap.
Yeah.
And then ultimately that's exactly what it did. And I was like if I had just been waiting like I don't know why, I'm
Yep.
not gonna worry. Actually, all that like complicated. That's some complicated shit that I was about to go on. Like shit. What you're saying actually is very grounded, and I think that's the reality of like pay attention to the structure, pay attention to the back test, the sequence. Make sure if this happens, if this is bad enough, if this happens, then actually get out at the sequence. Don't be looking for it to give you profit.
Yep. And of
So
course, sometimes you'll get lucky and you'll be like, oh, thank God it went back in my favor, right? Thank
right,
God it kept going right here. But remember, we don't want to be in thank God, hoping, praying.
right.
We don't
Hmm.
want to be in pain mode. We want to be like,
Yeah.
okay, I got in short here. We got break a structure up. So now, best case scenario, it's I'm fucking red right here. Best case scenario is come back to my entry, lock in, reset.
Yes.
Or or take the risk. But if you take the risk, you have the potential to get even more on tilt, right? So you get in here and then you hit the reverse button, or you take long here. You're like, okay, well, now I'm back into even keel where I can actually make a clear decision.
Right.
But remember, break a structure. Now you're looking for the continuation of the sequence. So that's
Hmm.
a new kind of tip to look for, right? We break structure on the 1 minute, but just because we got it on the 1 minute doesn't mean we get it on the 5 minute.
Right.
But if you see break a structure on the 1 minute and on the 5 minute, then get the fuck out. You need to stop out because
$100%.
you will fucking get blown the fuck out.
Roger that. Yeah, and these were pretty nasty. I mean, these were full. These weren't just these were full positions here, so they set me back two big wins
Yep.
in a row. Um,
So
oh
let's jump into like scaling, right? You said that you went
yeah,
14 of 4, you're above your buffer. Now we can play it one or two ways. Let's increase. First one is okay, you had a 75% win rate last week of all your trades. You had a low amount of trade, which is awesome. You want to be under 20 trades a week. You don't want to be
right.
above that or above 25. I mean, you don't want to be
Uh-huh.
above 25 trades a week. Another rule, if you're not profitable or if you're like trying to create a system is
Hmm.
you will not you need to identify your grade A setup. Second, you need to only trade that grade A setup only if you see it. That's gonna save you so much heartache and fucking pain, right? Especially if you're a newbie and you need to get into, okay, I got my grade A setup, I got a grade B setup. Grade B being, okay, I'm gonna, for me, a grade B would be a break of structure on the 1 minute, not on the 5 minute, and enter on the pullback on the 1 minute. That's my grade B. Grade A is waiting for a break of structure on the 1 minute and on the 5 minute. Not only that, but the MACD and the RSI are both bullish, right? If I'm going long on the 1 minute and on 5 minute, they're both bullish. That's my grade A setup. Most of the time,
Okay.
that setup I fucking take and I win 90% of the time. My grade B, I win 75% of the time.
Okay.
My grade C is fuck it, I'm gonna take it right here because it hit my weekly level of first tag metric. I'm getting in, I have a tight stop, I have a cushion. That's grade C. And most of the time, I'm not even taking grade C. I'm only concentrating on grade A and grade B.
Okay.
If I have a cushion, I'll take grade B. If I don't have a cushion, I won't even touch grade B,
Okay.
right? That's gonna get you more lasered in and more picky on your trades. Don't fucking just take a trade just because, like this week I've been telling you guys, hey, is it gonna rip or dip at the gate? What's a chart telling you before it even opens, right? We're right 50% of the time.
Yeah.
Are you gonna take that trade? I wouldn't recommend it. You
No.
could, but the likelihood of you being red is higher if you take that trade, whether rather than waiting for your setup, looking for your grade A, you get in your grade A, and now when you wake up the next morning, now you got $100, $200 cushion. Now you can be like, okay, I'm willing to give $50 of my cushion back so I can let this trade breathe a little bit more,
Hmm.
right? That's that conversation you need to have. Now, you're going to be pickier, right? And when you're pickier, you're going to take that grade A setup, which that's most likely going to help you hit your one and done. I mean, last month I had like 1 week like a week and a half, almost 2 weeks where I was just one and done, one and done, one and done,
Hmm.
one and done, every fucking day.
Right.
And half of those days, it was after hours. I was like, okay, let me wait for the first 5 minute to open and then fib it out. And then I look for my play.
Yeah.
And then hit my trade. Okay, cool. I'm one and done. I don't even have to trade tomorrow. I'm so fucking relieved.
Yeah.
I don't have to trade. If I see a grade A primo setup, I might take it. Okay, if I hit my daily goal, okay, how much of that daily goal am I willing to give back? Okay, I'll give $100 back. Okay, so instead of a $200 stop loss, I have a $300 stop loss.
Right.
Hypothetical, right? Um, Now I have a bigger cushion. I'm still gonna in my day trade green, guaranteed green lock in, right? To be able to get your payout. Now, do I just chill? Okay, then I'll just sim trade for the rest of the day, just so I can just so I can keep honing in my skills, keep lasering in my fucking grade A setup,
Hmm.
keep getting experience with the grade A setup. Because there's a grade A setup with trend, there's a grade A setup counter trend, and there's a grade A setup in a range. And that gets more advanced. But just locking in and being picky with your grade A setup is going to help you reduce the amount of trades and reducing the amount of trades is actually helping you because you're reducing your risk of being in the market.
Yeah. Yeah, that's yeah, 100%. That makes
Uh,
sense.
but okay,
Okay.
so now that you have 17 out of four, 17 green trades, four red trades, that's an awesome fucking ratio, right? So now you can be like, okay, I'm gonna increase it by two or one, but
Hmm.
just increasing it a little bit more might put you on, that alone might put you on tilt, right? Because you're like, fuck, now I'm trading six contracts or seven contracts,
Yep.
but now you're seeing red faster.
Right.
Is that putting you on tilt? Seeing that red, is it going to put you on tilt faster or easier than if you stay at what you are for another week? And this is something that I would just feel out, right? Sometimes I would increase in 1 week. If I had 20 out of 25 green trades, then I would increase it one contract, two contracts. Okay, on Monday, I take a trade with my new contract size and I start feeling nervous. I start fucking feeling my emotions get in the way. Maybe I'll drop it down back to five for that week. And then now I'm up $1,000 above my cushion. Now I can increase it by two or three and not even feel that pressure of losing my buffer. So it's all emotional, right? Is scaling up gonna make you more emotional? And this is one of the reasons why we used to tell Easy, like, hey, you need to see that P&L, whether it's red or green, you need to see it
Hmm.
so you can get comfortable with it. If you're not comfortable with it, then reduce it back down. Because
That makes sense.
that alone right there is telling you that you're not ready for the next scale. But
Okay.
if you're comfortable with the reds, like me, right? I went from red 25 being horrible to see to now I can see 22, 2400 red and not even flinch. But that's dependent on my account size. My account size was 600 back then. Now it's a few $1,000s. I
Hmm.
can I can see that and I can you're pretty much like Mark Douglas says, you're accepting it, right? You're accepting the $25 loss. You're accepting the $500 red loss already before, because that kind of checks your emotions. So on Monday, if you're ready for it, I would increase it by one or two to see how that feels. Because once you get to NQ, that's a whole different feeling. Because you got one NQ, you can either do it one NQ or 10 MNQ, right? One NQ won't let you scale. 10 MNQ will.
Yeah.
So that's the way you got to bump it up, right? I would, for me, I would recommend once you get to that level is practice with 10 NQ or 10 MNQ first. Because you can lock in six contracts, seven contracts,
Hmm.
let three ride, and you're still going to end up green, whether it goes against you or breaks you even. And
Hmm.
if you're using one NQ, you're up green $300, and then you're red $100. You're like, fuck, I just lost $400,
Yep.
right? And you can't scale. You can't fucking get in and out and let a runner run. So to get up to two NQ is okay. Let me first practice with 10 MNQ, and then once you get to that level, right now I don't recommend it. At max, probably seven or eight contracts. So scale up to 6 to 8 contracts, right?
Yeah.
From five to either 6 or 8 contracts. I recommend six. And then
Yeah, I was
once
thinking about seven,
what
six, six,
yeah,
seven, same shit.
7, lock in 5 and then let 2 run.
Yeah.
Remember, you always want to lock in 75%. Unless you have two. If you have 2 contracts, obviously you can't lock in 75%, but lock in one at your target, let one run. Once you get to 10 contracts, you get used to that. Now you got a buffer, you got a bigger buffer. Don't go to 2 NQ, still practice on MNQ, go up to 15 contracts.
Hmm.
Get used to that. Get used to that. Get used to that. Get used to the L, the red P&L, and also get used to the green P&L. Because even like, let's say you've never taken a trade where you've made $1,000 or you made $500 in one trade, your heart rate's gonna go up, whether you think so or not. Uh, Euphoria is gonna go up even more, right? And that euphoria could cause blindness, and then it goes against you, and then you're fucked. And then you're on tilt, and then the next day you're in a roller coaster on your way down. Um, but go up to 15, get an even bigger buffer, and now you can do two MNQ, right?
Hmm.
After that, scale up. So you scale up to 20, after you scale up to 20 MNQ, now you're ready for 2 NQ. Because now
Yeah,
you can lock one in, let one ride.
makes sense.
And you're going to be seeing 1K, 1200. You're going to be
Oh,
seeing some big green.
oh, for sure.
And you're going
Okay.
to be like, okay, now I'm used to that. Now I'm good. And now you can just ride the momentum up and put on the big boy pants and trade big size.
Yeah.
But yeah, I recommend scaling up next week, maybe 1 or 2 contracts more,
Yep.
so you can start getting used to it and don't get afraid. Just because you're bigger size doesn't mean to not believe your strategy. You have a solid strategy, bro. You have 14 wins this week. Or, yeah, that's a solid strategy,
Yeah,
you
it
know?
gave me huge confidence. I was saying before we started recording, it gave me huge kind of like I was looking at trades I was entering this week. I was like, oh man, because I was getting close to clearing my buffer, and I was like, oh, am I like getting a little cold feet? But then I was like, last week, man, I was it's like I was 14 for 17. I was like, I got nothing to worry about. Just take the trades. So. Absolutely. And then what? So, first, Mark asked a question. He said, "Can you give an example of a grade A?" And I think that question's to you, but I think I was about to say my grade A, and then I just happened to read the question, and maybe actually, my grade A probably lines up with what yours is.
I,
But
I I did kind of answer it when I said, that my grade A was a break of structure on the 1 minute and the 5 minute
yeah, 1-5,
with MACD and RSI being bullish if I'm going long, being bearish if I'm going short.
and an MA pullback perhaps
Yeah.
for
Yep.
5 pieces of confluence.
Yep.
Okay, and then a grade B. I'm thinking a 1 minute structure break and then a deeper MA.
Yeah.
Like you have a 1 minute structure break off of an MA, and then maybe one other thing. For maybe 3 pieces. I don't know what that one other, maybe some sort of RSI divergence or something like that.
That or a
Like,
bullish 1 minute RSI. But like when it's a grade B and there's bullish 1 minute and bearish 5 minute, what does that tell you? That 1 minute micro trend is bullish, but the macro 5 minute trend is bearish,
right.
meaning that you got to counter scalp it on the 1 minute.
Yes, counter trend scalpo.
Yeah.
Okay, and then I think my grade C is probably just like some deep dip buy off of some like just some deep dip buy off of like a 15-minute EMA or something like that. I mean, this might even be like some, Yeah, I don't even know what my grade C would be, but I'd like it to probably because you want to codify your trading, whatever. So probably some sort of just deep dip buy. I don't know what it's going to be it a level or a fib or 15 minute or an hourly MA or something. But just some like one contract dip buy. But I'm focus on the A and the B. Um, but yeah, so then in the end we have about the same grade A setup, huh?
Yep.
5 minute, 1 minute structure, MACD, RSI, and MAs.
Yep.
Yeah, that's funny. We did when I first started trading, I was doing something totally different, and then in the end, I am winding up converging right at your strategy.
And you will continue to evolve, bro, because if you stay static with your strategy, then you're gonna fail in the long run. You need to learn how to adapt your main strategy to the market. Because the
Hmm.
market, right? We have Trump in now, so now we know anytime there's a tweet, that bitch can fucking dump or squeeze. When Trump gets out of office, it tends to slow down and that is gone, right? The tweets are gone, whatever. Maybe the new president even tweets more. Who knows? But you have like Brandon, he's adapted his strategy so much that it's kind of taught me to adapt it as well. Because things go in and out of style, right? Sometimes the moving averages are in style and they work to the T. Sometimes the fib levels work to the T. Sometimes ICT works to a T. Sometimes it doesn't, right? And you being able to identify when your strategy or that particular strategy is in style will make you that much better. And being able to adapt it, right? Instead of like we're in a bull market. In a bull
Uh-huh.
market, my moving average setup with NQ always tags the level and it bounces, right? But in a bear market, NQ might slip that level a little bit and then go your way. And those are all little characteristics you need to start paying attention to that will
Okay.
help you in the long run. Just pay
Hmm.
attention. In a bull market, what are the characteristics of NQ? In a bear market, what are the characteristics of NQ? If you're trading NQ, if you're trading ES, and obviously look for those characteristics. And it's always going to evolve and change. Just keep evolving with it.
Sounds good.
And like slightly modifying your main strategy.
Yeah.
Don't go full bore fucking change your strategy. And then next thing you know, you're gonna be lost in the sauce again and you have to start all over.
Lost in the sauce again. Yeah, one thing because you were talking about it. One thing I started dropping back in a little bit of is anchors, like the 15 minute, the 5 minute off the lows. And that's exact. I'm feeling that where I'm like, I don't want to change something wholesale, the whole thing, but I can add in a little bit here and there. Stay adaptive, like you're saying. So that makes a lot of sense, Roger. That
Cool. Well, we'll end it there and then scale up next week and we'll see how that goes. Hopefully, and keep tracking. You need to keep tracking because it's going to give you more confidence in your strategy and just confidence to keep scaling up, keep scaling up. Because
Mhm.
I want to get you to NQ or ES like soon as possible because you're just gonna speed up the fucking P&L, right? You're gonna go from 200 to 1,000, 500, 1,000 bucks a day.
Sounds good. I think that sounds great. I could take NQs on the personal or these brokerage accounts. I like to prop with the that gives you the brokerage. I can take NQs on those and then mirror it to MNQs on the shittier props for leverage.
Yep, cool.
Sounds good.
We'll end it there.
Awesome, man.